Welcome aboard. It is nice to have your company as always for this episode of Trading Buddies. What episode? Got no idea, to be fair. But we've been going a while now, and where are we? One, two, probably only three more shows, or three more Monday shows, 3 more weeks of Trading Buddies, let's put it that way, until we break for the Christmas break. Goodness me, it comes around rather fast, does it not? One word for you guys. Omicron. Goodness me. Didn't we have a reaction to that on Friday? And before I go into that, I'm sure it'll be a topic of conversation on many broadcasting services such as this over the next few days, if it hasn't been already, and I'm sure it has. Apologies for those of you who are in the Telegram group, the Trading Buddies Inner Circle, for my lack of analysis and comment over the last week, due to the fact that I have been just absolutely out of time. I'll put it that way, out of time. So that will change as of this week, and I'm hopeful that you'll forgive me for that lack of attention to the Telegram group. If you're not in the Telegram group, by the way, you can join that. I think there's a link underneath me here somewhere. If not, Angel, I'm sure will put that into the chat box, and feel free to join us in that Telegram group. I think it's free for a month, and you'll get just about that before we, as I say, break for the Christmas holidays. I may put little bits and pieces over the Christmas holidays. You just never know. I'm not traditionally a trader at Christmas time, but needs, wants, all those sorts of things. It's a case of what happens with this virus, or the strain of the virus. Look, I'm not a health expert. I'm an epidemiologist, and I'm not an economist. So trying to work out exactly what move next is quite difficult and quite challenging, I've got to say. That said, there should well be some very good opportunities to make some cash in the next little bit when the market does actually decide what it's going to do as a result of this this new strain, and what it means to the world, basically. We don't know yet. So to my mind, whatever we're doing here, or whatever we're seeing in the markets, is pure speculation. And we're probably selling the rumor, if you like, which is the reverse of what normally happens. But when it's fear, and fear is exactly what we're seeing, or what we saw on Friday, but now we're getting a more considered approach. And it's very difficult to forecast what happens next, because we don't know. I mean, we don't know any facts about this virus or the strain of the virus, except that it's out. And it's different. It's different to Alpha, Beta, Delta. I thought I'd have a far better way to learn the Greek alphabet, frankly, but there you go. And now we're at Omicron. My goodness gracious. And as I say, we just don't know enough about it. Well, I don't certainly know enough about it. I guess there are people in the world who may do, but that certainly hasn't been released to the public at this point. And until we know the actual effects of what Omicron can do to the world, it's difficult to say what the market will actually do, whether it's going to stay still until we do get more information, whether there's going to be more speculation, whether people will try and make money on the back of safe haven plays. Who knows? Frankly, I'd rather stay on the short side of the Aussie, the CAD, and the Kiwi, certainly against the yen and the Swissy, if I'm a currency trader, which I am. So they're probably the thoughts that are going around in my tiny little brain. So you just never know. It may swing around the other way. So I don't think there's an air of confidence about me at the moment that would suggest that I want to jump into anything new. I'm already in a short CAD Swiss. That'll just about do me for now. Thought we were very unlucky last week. That was our trade of the week, CAD Swiss, by the way. And of course, we're making money on that. But I thought we were very unlucky on this one. Kiwi, and in fact, I thought, am I allowed to say we got robbed? I'll say it anyway, even if I'm not. The reason I say that is you can see that the stop loss here is 80.25, and there is 80.25. Here's where we entered the market here. So price never traded anywhere near 80.25, yet we got taken out with spreads that opened right up for whatever reason. I think it was on changeover actually that it occurred, but it didn't get within 10 pips of our stop loss, yet we were taken out, and the rest is history. So a really, really nice trade turned into a losing trade. That is effing frustrating because you get it right and you get robbed. And that, I'll just leave it at that. Look, that's in the hands of the broker at the moment, that particular situation. Guess what will happen? Diddly squat. They will come up with, just read the instructions, guys, read the fine print, and that's as good as it gets, I'm afraid. And you wonder why I hate brokers. There's a very, very strong case in point. Robbed, thieved, stolen money from my back pocket. You arseholes. Anyway, I do get a little bit angst about brokers when they do that, but they'll say it's not their fault. Have to provide liquidity for the mob. My goodness. So there's the sad tale. The good news, of course, is that the trade of the week, CAD Swiss, did perform. Eventually, did perform. Probably on the back of the COVID news, of course. But you know, I think we had it right, and I would have been horribly disappointed that if that candle didn't produce something, and it certainly has. Very, very quickly. Pound US dollar, the breakout trade, hourly chart, really we're inside Friday's bar, right? So is that going to break out? I have no idea. Is it a good trade? I don't believe so, because you've got a risk of about 90 odd pips, something like that, a little bit more than that. Your first resistance here, really, that stronger resistance, is around about half that. You've got to get 1-to-1 to get a break-even trade. On the other side of the coin, you've probably got a fair bit more space, to be honest. So that's maybe worth consideration. But I believe until the market gets more news on Omicron, I don't think we're going to go too far. If anything, we might retrace. And I suppose are already underway. We'll see what happens. They might push the go button again and sell off. I don't know. Hey, Ash.
Hey, buddy.
How you going, mate?
I'm all right, mate. Happy birthday to you. How'd you feel?
Thank you. Yeah, no, I feel older. That's obviously psychosomatic, but it's a thing.
Yeah.
Yeah.
Do you know, mate? You've probably had a few days away from the market. I've been in the midst of the storm, the eye of the storm, for the last week. Yeah. Just watching this stuff unfold, and you know, I was in the middle of it. But your analysis and the way that you've sort of talked about the approach, I can't. It's so insightful. I was just going, yeah, that's what I think. That's exactly what I think. Because the thing is,
well, there you go.
Yeah, do you know what? Where I make you right on the money, and I still think sort of downside is the safer way to go. Just while we are in this kind of confused phase, and we'll go through some charts in a moment. But where I think you're absolutely on the money is that, to my mind, this next period, potentially in the next week or two, is tough. It really is, because does the market, you know, want to hang on? Which this morning we've had some gaps to the upside on the Ftse and everything else. In fact, I'll show you the charts if you're finished.
Yep, sure.
Just for a little while.
Actually, only one thing: if you are in the CAD Swissie trade, and I haven't updated in Telegram, stops are at break even at this point. I think I probably did update in Telegram, but that was last week, and I was kind of in a blur last week, as you see. I've been nowhere near charts, frankly. So it was interesting to see. I got a Telegram message from Ainsley suggesting that there was a risk-off sentiment come very, very rapidly into the market. That must have been on Friday, obviously. So I did have a look then and saw that our CAD Swissie trade had got into profit. But that's all I know. I didn't see anything last week at all.
Do you know what's great about what happened is that every single product really reacted the way that you'd think it would react. Nothing did anything odd. And you know, let's talk through some of the things that did happen. So this is the Ftse 100. Now, the Ftse. Now, I mean, look at that. That is an unbelievable bar. Now, the other thing that we were talking about, we've been talking about for weeks, is the fact that if the market all of a sudden has a reason to turn around, it's going to come down hard and fast. And that's effectively what has unfolded. It's coming down hard and fast. The Ftse, massive move to the downside, big gap up. You can see this inside bar here is basically a gap. And you can see that on the 4 hour better. So this gap needs to be closed, but so does this gap need to be closed. Now, does it go here before it goes here? I would have thought not. I mean, I've got this trend line, and I don't know why I've got this particular trend line. Oh yes, I do. Here we go. This is a level. Might be able to see it better on the monthly. This is this lower level here on the monthly. That intersects between this level, and we're now here. So we're right on, basically, we're just underneath the primary trend line, which we just tipped above it. But now this is almost a test zone. So this is a point that actually could move to the upside and quite comfortably move to the upside on the technicals. But there's the gap down at the bottom suggests that it might come down first. Personally, there's another primary trend line here as well. And personally, I would like to see this one tested. I'd like to see this down here. I'd like to see the Ftse futures down at around about 68, 6,900 before I was initiating any longs. And the longs I initiate here will be investment longs. I'll just go and buy the Ftse effectively all share index and actually put some money in it rather than just trade it. But for right now, the trade is tricky because we are at this kind of inflection point here. As I say, I think this gap needs to be closed. So I'd be looking for downside. There is a pivot here as well. The monthly pivot with the weekly pivot. So the pivots are sort of stacked up, again, making it very, very difficult around here. Weekly pivot there, monthly pivot there, daily pivot there. It could just bounce around between all these points like a pinball machine before it does break down. And as I say, I'd be looking for downside, but difficult. And the reason it's difficult is because, as you said, mate, we're learning the Greek alphabet really through COVID, which is fantastic. But the reason it's difficult is that on Friday, the lack of liquidity because of Thanksgiving just shoved the market around all over the place. And the question now for the big guns, the big investors, is, does this give us a buying opportunity?
Didn't think of that.
Yeah. Well,
that's why it's moved so far. Yeah.
This is why it's moved so violently and viciously, because there was just a lack of cash, which means that those bigger retail traders all of a sudden have a stake in the markets, and they're much more likely to be really nervy and do some strange things. But you look at the VIX. The VIX just took off to the upside, slightly under the. Now it's under these pivots now, so it might just start to ease back. But I think this particular scenario is a strange one, because if is it Omicron, I think. Omicron. If Omicron turns out to be problematic, central banks have to curb back their plans to raise interest rates. Good for markets on the face of it. If it doesn't, central banks will stay on the same rate of interest rates. Bad for markets. But by the same token, does it affect GDP sufficiently enough to actually affect markets negatively there as well? So it's not absolutely just a perfect, right, this could happen, markets down either way. It's not the case of that. The markets actually could rally here if they perceive the fact that this strain is going to curb the central bank's policy, and policy actually stays more liquid for longer. So I think the Fed this week is going to be quite integral. I think that the uncertainty that is probably going to come out of the Fed's rhetoric is going to be difficult, because the Fed will probably say we're on hand to move interest rates, but we might need to wait a little while. Don't know. It's very, very difficult, isn't it? And that makes these trades now for the next few days difficult, and probably not very sensible. You may grab something, but with this kind of volatility, it means that the likelihood is that it jumps in the opposite direction or in your direction, depending on which way you go very quickly, is there. But it might just stay in this tight coiled spring again, for until it kind of gets some more news. So it's going to get nervous. It's going to get jittery at this particular stage. But downside definitely would be the way to go. In fact, I say that most markets reacted the way that you think they should, and let's have a quick look at some of them. The euro versus the CAD as an example. The euro was always going to fly to the upside, and one of the reasons I can put on that is that if the euro has basically been saying, or the Christine Lagarde has basically been saying, not raising it, not raising it, not raising it, not raising it, we're not tapering, not doing anything, and the rest of the world is saying tapering, going to raise interest rates, we're going to taper, we're going to raise interest rates. All of a sudden, they may not be able to taper and raise interest rates, which makes the euro undervalued because everybody would have priced those points in. So that's why the euro.
So correct.
Yeah, so that makes sense to me, and obviously the CAD battered if oil gets battered, and oil got battered because we get the sort of travel restrictions. So really, for everybody's kind of mindset out there, when this sort of thing happens, you can start going, okay, well, where do we put our money? And this is an obvious one. The yen's an obvious one because of the same reason. They're not raising interest rates. They're not tapering. So if the rest of the world has to all of a sudden not taper and raise interest rates, of course, there's going to be a recalculation of valuations. So the yen starts to fly, apart from the safe haven factor, of course. And then you get stocks. Netflix started to fly. Zoom started to fly. Peloton started to fly. The stay-at-home stocks started to fly, which means that now, because of the volatility, if they come out and say that Omicron is not quite as bad as we initially thought, those stocks are going to be toppy and they're going to tank. Very, very quickly. So you can be on the lookout for that. Not wise to get into it early, and probably not necessary. You can just let this thing unfold. We can let this thing take its time. So the Nasdaq I find a difficult one in many respects because tech could actually do quite well out of this. However, what we saw on Friday was just sell everything. Get rid of everything, but the Nasdaq didn't get affected anywhere near as badly. When you look at the Nasdaq, actually, all that's happening really is a bit of an unwinding. Still got a nice clean pattern here. Looks like a head and shoulders pattern is forming, which means maybe even Nasdaq back up here. It still needs to test this level here as well. Still hasn't done that, so that may well happen. But the Nasdaq still looks relatively sound, and this is where you go, well, if I see a selling opportunity on an indice and I am not really that comfortable because of the scenario, why don't I sell that indice, buy the Nasdaq, because it looks like a good hedge against anything too bad right now, because the Fed is a problem for the Nasdaq, but Omicron could benefit the Nasdaq because of the tech stocks in there and the stay-at-home plays that you get within the Nasdaq 100. So Nasdaq may well be a beneficiary of this. The ones that I thought were odd, mate, and I was going to say, everything reacted the way it should. I don't think gold did.
I was going to say, I'll bet you're going to say gold, because that's kind of weird.
It was strange to me. It was strange. There was pretty much, apart from this little spike that started everything, this one here, it was strange to me how gold didn't become the safe haven. Where you saw the yen and the Swissy kind of go. But look at gold now, under this level of price action. So that suggests downside on gold. And silver even more so. Silver actually didn't bother spiking to the upside. It just went down, and now again it's doing the same thing, and this is under some pivots here as well. So silver looks like downside. Lewis has been calling that for quite some time, and he's looking like he's right on that. But just very a couple of strange ones there. Now I'd like to get an explanation of why. How you find out what's going on with those ones, mate, I don't know. But gold and silver, I think, are quite shocking. I was in a trade on silver a few weeks ago. I managed to get my stops to break even, and actually, I was quite a bit up. I didn't move my stops, and I was quite nicely in profit. And I didn't take any profit, and it came right the way down and stopped me out. And even though it was a bit of a kick in the gut, I saw an opportunity to make a big play. So I thought, you know what, it's free, so let's go with it.
Yep.
What I am pleased about is that it's gone way below where I bought in, and actually at least that stop loss kept me safe. At least I didn't kind of leave things really loose. So it swings and roundabouts really with this stuff. But difficult market anyway, mate.
Yeah, with gold, I mean, gold was at a very strong, in my opinion, very strong resistance level. So in some respects, I can understand why that has sold off to some degree.
Yeah.
But I don't know that technicals mean anything at the moment. It's very, very difficult until, that level there. Actually, if you go down to the second spike, that high test bar, and start your trend line from there.
Yeah.
That suggested to me that there was going to be some downs. But as I said, I'm not sure we can rely on technicals at the moment until this story unfolds.
No, I agree, mate. I agree. It looks like that's the pattern with gold. Gold is a really strange one, isn't it? I mean, I don't know. I don't even know where the pattern is right now. It looks like a maybe a triangle. I'm not sure, but I agree, mate. I just don't think we've got anything to go on. Finally onto the S&P. S&P is holding on so far today, and similar to the Nasdaq in many respects, but big drop down on Friday. And I still think there's some downside, as I say. I don't think you get a move like that just gets swallowed up without any nervousness. I think that there's still some downside with the S&P, and it's still got some areas to test. There's a little trend line down here, which might be there, but it might even be there. I don't know if you were sort of taking it to the absolute touches. You got this horizontal level here, which hasn't been touched either. And it looks like an opportunity to kind of test the level before going again. That line looks about right to me, actually, somewhere along there. So and as I say, mate, we talked about it. This was the longer kind of the longer pattern on the S&P, and the Nasdaq is exactly the same, where it was close to these close to the channel highs. Probably is there, about there. Right at the top of the channel, comes down to the middle of the channel. Does it go again? Well, we don't know. We just don't know. What we do know is there's a buying opportunity. We don't know whether it is a good buying opportunity. So this is where we just have to keep our powder dry, to my mind, and let it flush out a little bit more. Tends to be a good week this week for the S&P and the Nasdaq.
Yeah, because it's also, if it's a buying opportunity, it's also potentially a good selling opportunity, because you're just being given the potential driver for the next, however, we don't know.
Yeah.
And we'll look back on that if it is the driver of the market for the next 2 months, 3 months, who knows. We'll look back on that and say, well, that rally was an excellent way to get into the market.
Yeah. So
again, you're in two minds, and I just think if you are going to trade at the moment, you better do it at fairly small risk, I reckon.
Yeah, I think you're right. I think you're absolutely right.
Build a position, no problem, but that initial stake needs to be really considered, I think.
I agree, mate, and it's close enough to the end of the year. I mean, certainly if you've had a profitable year, it's close enough to the end of the year to kind of say, I might even take December off and just do some research and just do some tidying up. Maybe sort out my journal, maybe sort of like note down some bits and pieces with the time that I would be trading. Actually get some kind of paperwork in order rather than doing the trade. This is the kind of thing that gives you the opportunity to do that. Of course, if you're not in a profitable position for the year, then the desire will be still to want to trade. But it's going to be difficult, and I get that desire. Sometimes you just got to tidy things up. So
I think if you go back to square one and say, well, okay, how much am I prepared to risk between now and the end of the year?
Yeah.
And if that figure is easy to do, because as you say, if you're in a winning position, then just you can scrape a bit off the top and say, okay, that's it. I'm going to trade that much. If I get more in my account, fantastic. If I lose it, then it doesn't matter. I've still had a profitable year. Or the reverse. Okay, I'm still behind. I'm prepared to lose this much for the year, and that's it. That's your kitty from now until the end of the year.
Yeah, I think that's a good idea, mate. And do you know what? I would just the very last thing I would say as well is look at this. I mean, I think this is today and tomorrow pivotal. Now, we haven't seen a bar like this on a monthly. We're not talking about a daily or a weekly here, or an hourly. This is a monthly bar. Haven't seen a bar like this for, well, let's have a look when the last time was. And it's not, okay, it doesn't look like a massive bar by any stretch, but we haven't seen the S&P. Oh, why can't I do that? There we go. This one here. We haven't seen the S&P. Can everybody see that all right? That's quite easy to see, isn't it? I don't know if I need to make it a bit bigger. There we go. Haven't seen the S&P kind of give us this kind of bar for quite some time. Now, so it's today and tomorrow. So where's price action by tomorrow? Today's suggests that we might well be quite flat, possibly. And if we're flat, it's going to look like this, which does suggest some downside. I'm not saying it's going to all of a sudden reverse, but that suggests downside, just like it did here. And okay, we had a little bit of a spike to the upside, but it eventually came down. Another little one there brought us down initially before bouncing. And we're at this toppy level here as well. So we have to kind of recognize that. So I think that one looks ominous. You look at the NASDAQ and you see exactly the same thing. It is, oops, it's this on the NASDAQ. Pretty much exactly the same thing, not quite, but it is looking like a very ominous bar on the NASDAQ. And we've had a few kind of false signals here and here, but before this one worked out. But this one's, this is on relatively significant news, and also this takes us right into December, which obviously takes us right into the end of the year, which takes us into 2022. That's the time when people will be making decisions. Do I have a portfolio this year that is going to continue to move to perform, or do I need to shave back on some bits and pieces because I don't think 2022 is going to be quite as good as 2021 or even 2020 for that matter? So I think the next 2 days are potentially quite telling. Potentially, obviously, if that turns out to be a nothing bar, I still think some retracements in order, but it wouldn't suggest that there could be a complete turnaround. For a little while.
The worst part about all that is there's no precedent. We're at all-time highs, so you've got no gauge. You've got no gauge as to historically what the market is prepared to accept before it does take profit or before it does reverse. So that's the quandary that you've got.
Yeah, and I do think there's a quandary with the NASDAQ, particularly anyway, because I wonder whether people are just going to sort of go, well, that's the safest place to have my money. I might get out of the NASDAQ, I might get out of the DAX, and I might get out of the Ftse, I might get out of the CAC, anything that is exposed. The Dow, goodness me, the Dow got an absolute bloody nose on Friday. It really was a terrible performer, the Dow, and I'll show you what happened with the Dow. Because the Dow's got much more, and this is on monthly. Let's have a look on the daily. The Dow's got much more exposure to travel stocks and industrial stocks. So it did do a lot worse. And I think it's quite telling that this makes a lower low. The NASDAQ, okay, maybe you could argue a lower low, but I still think this is within a range. I think the NASDAQ's actually looking relatively solid, which is why I think the hedge trade is a good way to go. You go long on the NASDAQ, you go short on the Dow. If the Dow manages to retrace somewhere around here, you can go short Dow, long NASDAQ, and then if they both pop up, the NASDAQ's still likely to outperform. And if all of a sudden there's trouble, the NASDAQ looks like it's likely to outperform. So it looks like a pretty good trade right now if you can pick the right price.
Yeah, look, I don't know a heck of a lot about indices. I've got to be absolutely frank. So what they're likely to do in fear territory is clear and obvious. Whether that fear factor has yet hit is not obvious. And I keep saying the same things, because that's exactly the way I feel. I don't see that there's any clarity at the moment. And I think the market today is probably suggesting that that's exactly the case. It doesn't know what to do. So if the market doesn't know the information, then it's likely to do very little until some more information is forthcoming. Those who haven't entered the market yet is the interesting point. And as you said, very poor liquidity on Friday would suggest that a lot of traders, a lot of institutions, a lot of institutional traders haven't yet made their mark.
Yeah.
And that might have been an instigator of some moves in the last half hour, but we haven't seen that. Well, I haven't seen
absolutely, mate. And that's the question, isn't it? Do they sort of think, actually, what a bargain. Thanks very much, everyone. You've given us the price we need to get in long. Or do they go, okay, now we weren't at our desk on Friday. We need to be a bit clever here and manage to maybe push the market a little bit higher so we can also get out.
I think probably US session might be a bit more telling than this one, because the UK traders have had an opportunity to have a crack at this, but the US have not. So that'll be interesting. The US session tonight, I would think.
Yeah, I think you're right, mate.
Or this afternoon, depending on where you are. Also interested to see on how George is going to approach this on smaller time frames, because I think they're the ones that are going to be most difficult to trade.
Yeah, I agree. I mean, I'm interested, the guys in the room. And have you got any thoughts on whether you want to trade this week, or what's your thoughts on it? What's your thoughts on the trade? Because the thing is, you may well be sitting here going, I don't want to get involved. Or if you're already in a position which has moved in your favor, that it's also sort of like, how do you manage that? Are you gonna manage it slightly differently? Because this is a different market, and the reason this is a different market is because the reason the market has moved has been, we've been blindsided. It hasn't been something like, okay, the Fed are they going to raise interest rates, and then bang, they raise interest rates, and then you get that big move. It's not that at all, because this does put everything that we've been talking about really for the last 2 months about the Fed and how they could affect the market because they're going to start taking liquidity away, or the control of inflation. This puts all that stuff on the back burner while at the same time accentuating some of the problems. What does this do to inflation now? Does this, is this the moment? And we not to get back to kind of doomsday stuff, mate, but is this the moment where we really do see things break? Because what we've known all along is that the world can't really take another huge shock. And is this going to be it? I don't know.
Yeah, look, again, we just keep saying the same thing. If we don't know, we can't really trade it with any confidence. So to actually make a stand right now and go, well, okay, this is the end of the 10-year rally on the S&P, or whatever the case may be, is you may get lucky if you trade it, And if you do, then you're going to make lots of bucks. There's no question about that.
Yeah.
But if you get it wrong, again, you've just had a losing trade. I guess the question becomes, what's your risk appetite? And that's always the case, isn't it? If you feel in your gut that this is the beginning of that, then sell the rallies. I've got no problem with that. But again, don't risk more than you're prepared to lose. As always, I mean, that's sage advice at any time, but particularly right now, because you can wipe it out in very, very short space of time. It only takes one eminent scientist or eminent epidemiologist to stand up and say, okay, Omicron is there, it's out in the community, it's going to be worldwide, but you get a mild headache from it. Big deal. And then markets just reverse exactly what they did on Friday. Of course, the other side of that is this is the worst variant yet, and it's going to kill 50% of people, or whatever the case may be. Then you're right. Everything sells off dramatically. Except, and there's the question mark. Why has gold not rallied at this time? That's the question.
Very perplexing. The cryptocurrency market also had had a bit of a bloody nose as well on Friday.
Did it?
Yeah, not doing too well. I mean, you know, regulations aside, they are a risk. And this is, you know, it's an interesting one, because we've always sort of said about the argument between Bitcoin is Bitcoin digital gold? And you have to say on Friday, because of the sell, you'd have to say no. But then you put up a chart of gold and it's sold off, and you say, oh, well, maybe it is then. You know, it's like, I don't know, you know, digital gold, because it's got some protection, but neither of them protected anybody on Friday. So it might still be digital gold. Or is it a speculative asset that people sort of like have as risk on, you know, with risk on, which again, you know, everything's sold off. So yeah, you'd have to say yes to that as well. So odd, really, sort of like.
No, very strange.
Yeah,
very strange. But you've got to now think. Well, sorry, I see you've got to. You don't have to do anything. I have to now think that because the market cap with cryptos is now in the trillions, that it's not going away anytime soon. So getting a handle on how to deal with that probably is something that everybody needs to look at some stage.
Yeah,
I remember saying, I don't know how many years ago, I wish I had the recording, and might have been Brexit. Might have been Brexit. And we were pontificating on what was going to happen next. And cryptocurrencies were obviously around, and like the market cap was very small at that point. But I remember we said maybe in 5 or 6 years' time we'll be trading cryptocurrencies. Yeah. Here we are.
Yeah.
And here we are.
Yeah. Yeah, the world has changed quite significantly, mate. But yeah, I mean, I suppose, does it change? Does it change so significantly now that we actually see, you know, as I say, that the thing that we have been talking about for a while, which is a changing of the guard. It's just a strange one, but let this one unfold anyway. The Ftse 100 is probably down about 0.5%. Nasdaq hasn't moved. I think the S&P hasn't really moved either. So there is some stability going on out there. But as I say, I think ultimately I'm going to use this as a buying opportunity if it comes down a little bit more. And there's nothing, because you know, this is a story that they just dived on. Came out Friday, everybody just like, sell everything, we'll think about it later, just sell. So they sold everything. Now today we're sort of like going, oh well, actually could be a buying opportunity here. You know, that's created a bit of a window of hope to get a decent price. But then in the background we need to know how this thing is genuinely going to unfold. So we'll see some genuine moves probably over the next few days, I would have thought. Okay,
well, here's the thing. If I do have the opportunity to trade the Aussie, the CAD, and the Kiwi short against the yen, I will do so.
Yeah.
Probably against the Swissy as well. The rest I'd probably just leave alone. It's interesting to note that the dollar versus the yen and the Swissy will be, or should be, I haven't really had a look at those charts, should be quite different to anything else. Should be quite different. Because you're talking two risk-off currencies, Swissy and the yen, versus I'll say former risk-off currency in the dollar. So I think the dollar will be stronger in this risk-off environment if it continues than will every other major currency. Hello, there's Skype. You got Skype.
Sorry.
Then will every other major currency, except the Swissy and the yen. So if you're still looking at trading against the dollar, if it's not Swissy yen, I would be looking to sell everything against the dollar. I'll leave it as broad as that, I think. Wait for the opportunities, wait for your systems to kick into gear. I'm going to have a look at Eurodollar and tick just before George comes in, because
I was just going to say, mate, the reason I was just on Skype is that George just Skyped us out. It'll be 5 minutes.
All right. Okay, cool.
Yeah.
So that means I've got 5 minutes to have a look at the Eurodollar chart.
Let's have a look.
So let's do that. Oh, I don't have control here. Why is it so? There we go. All right, so Eurodollar, let me take you back in time to a point where we saw a false break on the monthly chart of this area here. Clear false break, got above, consolidated, in fact, to the absolute letter of the trading strategy. Broke 2 consolidation bars, back under, retest, enter there, stop loss there. You're already beyond 1-to-1 on a monthly chart. So if you trusted that on, let's say, a weekly, daily, whatever the case may be, you'd be doing okay. I still believe that this has got more downside. Now it's gone through my 113.60 level, which is about there somewhere. And the reason I like 113.60 is pretty clear, or should be pretty clear. Since Brexit was announced, we couldn't get above it. Just could not. Try. This is a monthly chart, right? Try. False break. Try. Fell away. Finally broke, I think on some Brexit news, I can't remember what it was, and got back above it to a fairly reasonable retest of the area from which it broke in the first place. And then back underneath it after a couple of attempts. Bang. Can't remember what this was. Can anyone remember what happened in February or March of 2020? Sorry.
March 2020.
Yeah, what was going on there? So anyway, when that broke out, that terrible disease or virus rather, the euro versus the dollar went quite well. And now, 2 years on, or not quite 2 years on, we have now fallen back below that level. Now, yes, that's a monthly chart, and we've got, 1 day left in the month. It would surprise me if euro versus the dollar gets back above that level. Now, for that reason, I have to remain bearish. But again, going back to what I've just said and what Ash and I have just spoken about, this bar on Friday really surprised me, because yes, the euro was due to rally, but against the dollar, that surprises me. That does surprise me. So I don't know whether to trust that now. And that's the problem that I've got. So going down to the smaller time frames, I can see that the market doesn't know what to do just yet. I am still favoring the shorts. Pivots are very, very close together, which means the price doesn't really want to go too far away from them. If I can analyze what's going to happen next, I'm going to say this is going to go short, but I need to be able to trade that with some confidence. And the only way I can do that is if I get a false break of resistance. So on a 4-hour chart, I need price to get up to here, come back underneath it. Even better if it came back under the pivots, retested that area, then I can go short. Until that happens, I cannot go short. Same on the hourly chart, same on the 30-minute chart. It's all the same. Yes, I'd like to go, but I won't be. And if I do, again, it'll be at small risk. But this would work for me. Up to here, back underneath, retest, go short. So that is that's where I'm at on euro, mate. I'm going to keep looking at it because I think there will be big moves eventually once the market knows what's going on, whether that's today, tomorrow, and probably won't be. It may or not even be this week.
No, the closing monthly bars, I think, are interesting.
Yeah, have you got anything in mind?
Well, mainly that S&P and NASDAQ. You know, I find those two really interesting bars that are going to close out tomorrow. Does that indicate downside that could be a little bit deeper than we currently have by tomorrow? Because this is the thing, isn't it? Okay, yeah. There's probably nothing to see for the next couple of days, but does that mean that everybody just starts to buy in for a few days? It might do. You know, people might sort of like, you know, decide that because there's nothing to see, the upside is still on at a better price. But it might end up that they just sort of they don't like the uncertainty and provide something which does suggest some downside. But I don't know, mate. I mean,
it is the great catalyst for downside, though, isn't it? Uncertainty has always been the catalyst for downside.
Yes, it is. Yes, it is. And also we can't discount or discard central banks in all of this as well, because they were just about to get moving. You know, they were just about to start announcing what their next play was going to be throughout 2022. 3 hikes. Is it going to be now 2? Is it going to be 1? Is it going to be none? You know,
that puts the Kiwi under a lot of pressure, doesn't it?
It just, yeah, geez, yeah. That's not the best look for the Kiwi, that's for sure. You know, raising those interest rates.
So peeved I'm not still in that trade.
So what? I missed what happened with that, mate. But I know you were talking about the broker.
Well, like I said, we traded this bar here.
Yeah.
Stops where I've got that red line above the monthly pivot.
Yeah.
And we got taken in with this bar.
Yeah.
And then we had to withstand a little bit of drawdown.
Mm-hmm.
But the price has never got within 10 pips of our stop loss. Yet we were taken out.
Well, that's true, but that's only showing you the sell price. So obviously the buy price on the spread would have hammered you.
Absolutely. But what the hell are we doing with 10 pip spreads?
Well, when there was a little glitch in the market on Friday. I don't know. That might have something to do. Well, that's where they can. That's where they make their money, isn't it? I mean, they love this stuff. They love it. You know, when everybody gets blindsided, they're like, wicked. We can just put the spreads up now and
no.
a load of people out.
That was last Wednesday, mate. That was well before this.
Oh, okay.
That was well before that.
Was that the interest rate hike? The interest rate announcement.
It was nothing.
It was nothing.
It was changeover. It was changeover from Tuesday to Wednesday.
Okay, so they've yeah. I mean, I don't know what the spreads tend to be during changeover for the Kiwi, but that will be their explanation.
Absolutely, that will be their explanation. That's what I say.
Yeah. Yeah,
sit on it.
Yeah, brokers. Yeah, I mean, I feel like I got done by the broker a few weeks ago because I'm sure they've messed around with the amount of lots that I was putting in. You know, I don't change the lot size. I just change the same lot size, and all of a sudden I wake up one day and my box is 10 times higher than the day before, and I'm in a trade without checking it properly because I haven't changed it for a year. So yeah, I mean, so they do some stuff. They definitely do some stuff.
The enemy.
Anyway, mate, we are joined by George.
George, who was
yes.
I'm hopefully well and truly safe, buddy. How you doing, mate?
I'm doing very well. How are you guys doing?
Yeah, good, buddy. Good. Yeah, that's a good point, mate. You're right in the middle of all this, aren't you?
Yeah, can you believe it? But we're trying to carry on with life as much as possible by just because we've been under so many lockdowns. So there was that first severe one last year, beginning of last year, kind of dragged through. Then we got pulled out, or rather, we got, what is it? Level 5 is the hardest lockdown, and kind of went to level 4, level 3, adjusted, things opened up a bit, etc. We're pulled back in again middle of the year, and now just as we thought we can now resume life. We've just been, they haven't announced it yet, but it's coming. I mean, it's just, it's quite bad. It's quite bad.
So is there any news on the variant itself? Is there been any further developments on how severe it is, on how infectious it is, or on how deadly it is?
It's so the rate of infection is quite rapid, and how do they put it? The mutations. Okay, what we're saying is the typical word game changer. So it's almost as if the way we're looking at it, the way we're kind of cautioning ourselves, treat yourself as if you've not been vaccinated. Because guys are just throwing caution to the wind a bit, with the vaccinations. So if you're vaccinated, the chances of infection or death are much lower.
Mm-hmm.
But you got to exercise caution as if you're not injected.
Okay, so they think it's a lot worse, this one.
Yeah, definitely. Okay. I mean, from what all these scientists are saying, and from what they've picked up, it's a lot worse. It spreads more rapidly. It keeps mutating. It's really quite bad. So we don't know how extensive it's going to be. I mean, the last lockdown, the more interim one, they stopped us traveling outside of our, and we call them provinces, right? Like states, I suppose. Mm-hmm. So they were all locked down unless you had a business permit, etc. So we think that's going to happen again, because that had been allowed. Things had opened up, but I think it's going to happen again. A lot of guys who started planning to travel overseas just have to forego all of that because that's been shut down. So yeah, it's but you got to live, right? So cancel.
Yeah.
Well, as best you can, mate. It's not an easy task when this thing happens.
No, it's not.
Have you got any different approach you're taking to the market today? Generally speaking, is this the time to kind of hang up the boots and say, oh, I'm not playing today, or
double down?
Well,
which one?
What's interesting, actually, I mean, it's a good time to ask a question. I'm not trading my account anymore to the end of the month, and that's simply because I got some high returns last week. Hang Seng 50, and on I think it was Wednesday with a dodgy candle, inside candle on the Thursday, and usually I close all my trades on the day, but for some, looking at it, I was convinced 60% chance, the usual stuff, it should go my way. So I thought, no, I'm going to hold on to it. And stop was in the right place. I was in the 2% risk on the account I trade the indexes. And so, well, let's see what happens. I had no idea what was going to happen because I don't trade news, right? I'm just looking at the price action that's in front of me. And lo and behold, when I get up, there's this beautiful gap down.
Yeah.
Which was absolutely fantastic. So that was on the Hang Seng 50, which ended up quite well. Now that gave me some pretty good returns, up my returns for the month on that account. So I said, well, I'm not going to take chances on that. I'm just not going to trade. So the only thing I'm looking at is a euro on one of the other accounts, but I haven't seen anything to look at so far. So that's the only reason I'm in. It's not because I'm not trading. It's not because of COVID. It's because when I look at the charts, remember on the daily, I try and see a move set up that if I was trading the daily, I would trade. And then I go on that chart, go to a lower time frame and execute of that. So I don't see that. I got to wait for, call it correction for lack of a better term, to kind of play out and get clarity before I jump in.
I think that's really good advice as well, George, isn't it? That as human beings, to be able to handle the big losses or big gains, as you managed to get a big gain on the Hang Seng, and then just kind of without any relief, without any sort of like mental relief, is a dangerous and difficult thing to do. So it's better if you do have a nice big win, just take some time off and just sort of like say, okay, I need to kind of recalibrate in a way. I need to kind of just regroup and get everything back together, rather than going straight in and going, right, I mean, the markets obviously are difficult at this stage anyway, but also that I think the mentality of that does have to play a part. The mentality of making a lot of money or losing a lot of money does suggest, certainly from my experience, the best thing to do is to give it a week, let a weekend pass before you sort of like back in, just so you can kind of clear your head a little bit. I mean, it's really good. So I think that's really good advice that you've managed to kind of make a big one, and you're like, don't need to get involved, so I'm not.
No, and that's it. I mean, I think you guys know by now, usually I like to manage my trades. So just kind of stay in, if I get stopped out, I get stopped out. But if I'm in winners, I like to kind of hang in there and manage a trail stop, or when I see a clear reversal, get out. So, I mean, that when you get that decision, and at the end of the day, you're kind of saying, well, am I going to trade manages? Am I going to set a take profit? Or am I just going to make sure my stop is in the right place and get up and see if I can continue to manage this? So the decision is stop was in the correct place. And at that stage, by the time I went to the evening, in any case, if I'd been stopped out, I would have been a little bit of profit. So there would not have been any loss. But then when you wake up and you've got this sudden move, or it's not sudden, it happened through the Asian session, and you got the big winner, and you got to know yourself, because I had the clarity to say, okay, I can tighten my stop, let it run for the rest of the day, or I can take the profits. The both of them would have been ideal. And when I sat looking at my charts and trying to figure out, okay, there is the lower high, let me tighten my stops, which I did. But then I found myself saying, hey, because at the time I'm taking my daughter to school, I'm starting to think.
Yeah.
And if it's a normal trade I've taken in the Asian session, I just put the stop in the correct place, I go away. By the time I come back into the UK session, if I'm stopped out, I am. If I'm not, it's fine. I don't think about it. But I realized with that huge amount of profit, now I'm starting to think and wonder, I just close the trades, because then I just know that's a recipe for disaster. I close the trades, and I'm not going to trade until the end of the month. That's fantastic. So
it's difficult. It's one of those things, isn't it? Trade the best, I think, most successful times that you trade are when you've done all the thinking before the trade's been triggered. When the trade's been in trigger, to try and think clearly while the trade's in flow.
Follow your system is what you're saying.
Yeah.
If you've got a system, follow it. It's pretty much that.
Yeah.
But I tend, if that happens to me, and of course it happens all too rarely, but if it does happen to me, and you get one of those big surges and you're on a massive winner, and you weren't in front of the charts, which is best, I've got to tell you, if you're not in front of the charts when that happens, because you start to think, oh my God, it can't go any further. Oh yes, it can. It can't go any further. Oh yes, it can. Especially if you're on a 5-minute chart, you blokes must be going, oh my goodness. So what I would tend to do, because I'm only trading on daily charts and weekly charts and 4-hour charts, a little bit at the moment, I would go straight down to a 1-hour chart and move my stop above that candle, or maybe 2 candles. And then if it comes back and takes it, I don't care. And then walk away again. But everyone's different, as I've said before. Trading right now from a fundamental perspective is very much a case of take some risk off the table, in my humble opinion, because this is a toss of the coin right now as to what happens next. Fundamentally, I mean. George, you've got anything? I know you're not trading, but you said you were looking at the euro. I just did a little bit of analysis on the euro. What's your take?
Let me just open my euro there. Okay, so just these red lines here, that's the high of last week. So this is just a quick view on the weekly. Okay, high of last week, low of last week. And I keep that there so that when it comes into view, you don't get surprised at it, right? So we're right there presently. Now, what I gotta see is the setup of the daily for me to go to the lower time frame. This is a 10 EMA, so that's for me the indicator of the strength of a trend. You can always pop in the 20 if you want to look at it when you start to get a pullback, see if you get a bounce there. But in terms of strength, I'm trying to find or keep my eyes on the strength of the bear trend in this case. So this is the first pullback we've had that's kind of bounced. It's right there. We don't know whether it's going to bounce by the end of the day or not. But coming into the day, I'm not going to be looking at any trades here at the moment, because you can't, well, I can't look for longs because it's just a pullback. I can't look for shorts because we might get another just push to bounce off support now resistance, which also will be at around the same level as that lower high. So the market might get there today. And if the bears are strong, that could be a double top, failed breakout above the EMA, in which case, I would look at going short tomorrow. If it doesn't do that, if today ends up as a bear inside candle, I like that. That's beautiful, because that's the bounce off the 10 EMA, lower high, inside candle breakout mode. Then I'll go down to just go below the low of the day today. If it's an inside candle, go look for my shorts in tomorrow. So today is key in terms of what happens. Presently, my mindset is bearish. I just got to see how today ends. Micro double top, 2-bar reversal here, failed attempt and bouncing off that, or an inside candle. If any of those materialize with a bear body of any sorts, then tomorrow I'm looking for shorts on the euro. So today I'm doing nothing there.
Letting things unfold.
Yeah, I was muted. Very, very similar to what I just said, I think, George. So we're on the same page, mate.
Okay, excellent.
But it's waiting at the moment.
No, it's absolutely waiting. And I mean, it's going to be interesting. And what I've really learned, the selection of the trades is what makes a big difference for me. I mean, previously I could just open any 5-minute chart, make sure I've got the high of yesterday, low of yesterday, and just whatever the market brings. If it's a trend from the open, if it's a trading range day, we just trade that. That you can do if you work in just trading one particular chart. But I've chosen to look at 7 different markets, and I really want to, and the reason for that is I really want to set myself up for that 60% probability that it might go my particular way. And then I go into that market, and if it's a trend, we just work it out. If it ends up as ranges, we just in and out, taking our quick wins. But I want to get that set up on the daily first. That's why it's best to just to wait. They will come.
Yeah,
mate. Sorry, Ash. We both, Ash and I, and not just Ash and I, I'm sure, were surprised by the lack of enthusiasm for gold as a result of the Omicron. I'll get that word eventually. As a result of the Omicron announcement, if you like. What's your take on gold at the moment?
Okay, so that's weekly. I mean, so pretty clear. If you're trading the weekly, hopefully you'll have tried to find shorts during all of last week. After that, I mean, that's would have been a decent enough candle. But then just on the day, because I mean, look at the sideways price action here. If this was the only chart that you're trading, you could go in and trade it, but how are you going to trade it? Trade it as a reversal day, which means whatever happens, whether we break above the high of yesterday or low, which we didn't do here, but you expect reversals, right? Because it's a trading range market. So even if this is going up, you can't just go and buy and hopefully something's going to happen. It won't happen. Chances are there's a high probability that at some point the market is going to reverse and just carry on creating dodges. So am I going to jump into that? If I really wanted to trade and there was nothing else, then my mindset is going to be, okay, jump in now, but don't go and trade anything, wait for a reversal. So I would then just, if I was jumping in, okay, that kind of bears testimony to it, right? So if you jump in, you're not going to go long here. You're going to just wait and see, okay, level of resistance. Let's see if we get a setup here, failed breakout above that, lower high. And if we do jump in, you're going to be thinking of taking quick profits, middle of the range, before we get down here. So you could trade it like that. But the question is, what's the point of doing that when you can just wait for proper structure? Now, what would be the proper trade to take? Because we're in a trading range. If the day ends up somewhere here, let's say it's a bull candle, you're not going to buy that. You're going to go in the next day with the mindset of a trading range, which means I need to sell off the top So wait for a bounce off the previous high and sell it down here. Or if it ends down here, it's a trading range. Wait for a setup from the bottom of the trading range and back into the trading range. That's purely price action, but it corresponds to what you're saying. Lack of appetite because we're not going anywhere fast. Okay, what would pull the market down? Well, what to pull the market down is this trend line coming up here. This level could pull the market down. And I always say when I speak to guys, if it's not looking clear, just pop in your line chart. Okay, so you look at closes as well. So there is a low that's pretty significant, right? So that low for that month could pull the market down. If all these are the highs. Okay, so it's close to where the trend range is. So even if you get an attempt to try and break beneath this, don't go and sell anything. I'm gonna wait for a bounce somewhere here, somewhere here. This is a very strong level of support. Low close, that low, that ascending triangle. So we might just bounce around here. I don't know how far the trend range will carry on. What would the bulls want? So the bulls will say, okay, at some point there will be strength if we break above that trading range. They want to try and get to a new high up here, or just to break above the high of November. How long will that take? Going into the holiday season, or probably are, depending on how you look at it. Price action will always be there, but will there be enough momentum to break above that? That remains a question. So still, if it sets up here, and you get a nice bounce off here, there's still enough room to make a nice swing if you prepare to hold it to see if we test up there. What would the bears want? Bears say, well, okay, it's a trading range. If we break beneath the low of that trading range, our objective measure move is down here. Then we take out that low and start to try and set up for the new year. But I think we should put up a few things some time back when we were. You see that level there, that's the middle of the year. Remember we said high of the year, low of the year. So that's the middle of the year. So ultimately, the either side, first prize will be by the time the year closes, can we get a close above the midpoint of the year's trading range? That's what the bulls would like. The bears would just want to keep it down here. Okay, close beneath here, close beneath this ascending trend line, and set up for next year. So presently we're looking at a doji for the year, but whoever controls that might want to set them up for the next year.
Interesting.
Yeah.
Interesting.
Makes you wonder why on earth we turned up all year, mate. When we're just back where we started. What's the point?
Yeah, gold traders have just had an absolute bark of a year, really, haven't they? The fact that the market's gone nowhere. But the COT data, and it's difficult with COT data sometimes, because sometimes you think, well, if they, how can they not be picking this up? But it does tend to be pretty accurate with gold, and the COT, the commercial traders aren't interested in gold. They're not buying it. They're just, they're little bit of selling, but they're not interested in gold at all. And I wonder whether that's because it's too early or whether something else is taking precedent. I just don't know. But if the commercials aren't interested, then it does add to that layer that gold could be chopping around, and that's what's happened. I didn't think it would. I thought that they must have missed something. But the commercial traders really have been right on the money so far this year.
Well, they keep knocking the tops off. There's no doubt about that.
Yeah.
And there you go. All right, George. That's about it, I guess. For today.
That's what I'll be.
You're on voluntary holiday until next week. Well, no, it's only 2 days before the end of the month.
It's only 2 days.
So you're back in action on Wednesday.
Yeah. So we'll still keep looking at the charts daily. There is one of the accounts I trade the euro. So if something sets up today, like I'm saying, I'll jump into the market. But that's a different account to the one that's holding the Hang Seng and all the indexes, which I'm gonna let it look as beautiful as it does until end of November.
Take a picture. That's right.
Take a picture. But this.
All
this
right.
is,
So we can catch up with you again on Wednesday at 9:30 GMT. Is that right?
Yeah. So hopefully Wednesday we'll be talking about this if it sets up over. It's 9:30 GMT. And yeah, we'll catch up then, guys.
Fantastic.
Mate, thank you so much, and stay safe.
Yeah.
I hope everything stays as quiet as it possibly can over there.
I appreciate that, guys. Thank you very much.
Yeah, thanks so much, George. A brilliant analysis as always, mate.
All right, so we'll catch up. Thank you, guys. Appreciate it.
See you soon. See you next week, George.
Bye-bye.
Well, we're going to wrap it up as well, Jeff. We haven't really got much longer left. I don't know how many more shows we got left this year. We haven't decided on a date yet, have we?
I said at the beginning, we've got this week, we've got the week after that, and the week after that. That's it.
Okay.
So 2 more Mondays.
2 more Mondays, 3 more Thursdays.
Yep, that's it. So
Right.
three more chances to get your quizzing in top shape for a Thursday, and hopefully a little bit more clearer as far as direction is concerned and what we need to do next. I didn't go through the game changer bars for the week. I just very, very quickly do that. I'm not trading them, but let's very, very quickly go through the game changer bars for the week. There were 5 of them. None of them really too interesting to me, and really none of them surprising given what happened over Friday. So, well, this was a bit, no, this is not a surprise. EuroCAD, big game changer bar, broke not only back into the range, but straight through the range, closed above the monthly pivot. You're entitled to think that will continue if, and certainly George's comment on that leads me to, I won't say conclude, that's certainly not the case, but leads me to underline, I suppose, maybe add a little bit of fuel to the variant Omicron being quite serious. So if that's the case, then you'll probably see that continue to rally. The second of them was Euro Pound. I think I've got a Euro Pound chart up. Let's go to that. Euro Pound on the weekly. Interesting, this one. The pound considered to be, I guess, more risky than the euro, but this one didn't take out the highs of the previous week. So I'm a little bit concerned about that if I was to think follow through.
Do you know, mate, I think the pound ended up being another one of those where all the talk of interest rates was starting to get priced in, and then the euro, I think that's what's happened here. I think the euro ended up being undervalued because of what the world looked like on Thursday, because the world looked different on Friday. So then the euro becomes undervalued. It may still end up not being the case, but this might be a buying opportunity with the euro pound.
Yeah, it looks to be at the bottom of a range. So yeah, okay, I can get with that. The one thing that does concern me, as I said, is it didn't take out the high of the previous week. So that's somewhat interesting. The other 3 consisted of Eurodollar being one. Now that's a bar that we saw on George's chart because he had the weekly chart up. Very, very tough to trade that in isolation, I've got to say. And again, it will depend a lot on what the market does with this COVID thing. I think we'll probably see this move a little bit in US session, whether that's going to be in concert with the previous trend, which of course is extremely bearish, as that symmetry looks to play out. Looks quite good, doesn't it? But if that's the case, it's probably going to hang around here for a little bit, pursuant to that. Little bit of stalling, I'll say, in the market as it went up. We may well stall here as it goes down, but that symmetry looking absolutely spot on euro dollar. Dollar Swissy is the second last of our game changer bars for the week, and again another bar that didn't take out the previous week's low, but quite pronounced, I'll put it that way, coming off a resistance level. You're probably entitled to think that if nothing else changes, that will continue to go south probably down to a level in this vicinity, one would think. So if I was going to trade this week without COVID, and you can't say that, of course, but I'd be looking for a lower high in here on a daily chart, perhaps, to trade dollar Swissy short. That would make sense to me. Dollar Swissy, last one, of course, is its cousin, dollar yen. And on the weekly chart, that's going to look very, very similar, except it had a different position, of course. Coming off the top here, how strong is that resistance level is the question. Yeah, it's not too dusty, is it? Top of the range. So you've been entitled to think that has got some downside to it. And again, if the COVID interjection is meaningful, then this should continue to fall and continue to fall dramatically if that's going to be the case, because it has had a strong resistance level. Tough to trade the weekly bar, but if we come back in 6 weeks' time and Omicron has in fact done the worst for the market, then it'll be down here somewhere. We'll be saying, gee, that would have been a good bar to trade. I'm not trading it, I hasten to add. But again, a lower high does get me interested. A lower high in here somewhere. So there you go. I think the weekly bars are pretty much telling you what happened on Friday. And like we've said, or like actually recently, like we've said throughout the show, it's tough to get a good read on it right now until we've got more information on the virus.
Yeah.
So there you go. That's me, mate.
Yeah, me too, mate. Yeah, well, enjoy the rest of your week, guys. Be very careful. It doesn't look like it's much of a dead cat bounce that's transpired. If anything, things are still probably looking to test a low. So I'd still be quite keen on some downside while we are waiting on things. But my preference would be to let that downside flush out and then look for the longs in the indices. But have a safe week, and I think both Jeff and I are on the same page that we may well be doing nothing for a little while. Might just turn the charts off and let them do their thing, and seeing if there's an easier opportunity, because we want to try and keep this as easy and simple as possible. Trading should be simple, and when you get things like this that just come out of nowhere, the simplicity kind of comes out of it a little bit. So that'll be my approach. But have a safe one, guys. Have a safe one to you. Thanks for being my trading buddy as always, Jeff, and thanks for being our trading buddies in the room. Thank you to Angel. We'll see you on Thursday.
Absolutely, we will. Thank you, mates. What he said.